It's so easy to let fear or just frustration totally wreck a good trading plan, isn't it? That whole mental game, trying to handle complex math while you're fighting off the urge to just bail on a trade.
Yeah.
It feels like the hardest part sometimes.
Oh, absolutely. It really is. You end up fighting yourself more than the market. But imagine cutting down on that internal static. What if you had this objective co-pilot, an AI assistant available 24/7, just bringing logic back when things get tense? That really shifts the whole game.
Welcome back to the deep dive. And today, yeah, we're doing exactly that. We're looking past all the hype about old software and getting into 5 really powerful, genuinely beginner-friendly ways you can start using free AI, like ChatGPT, in your trading routine, like starting today.
Yeah, and just to be clear, this isn't about finding some magic money bot.
No.
No, it's really about using these tools to, well, simplify the hard decisions, boost the quality of your analysis, and maybe most importantly, build up that psychological discipline, the thing that keeps you in the game.
Okay, so we've got quite a bit to unpack. We're going to go from making AI your daily analyst to sorting out those nightmare calculations, validating your strategy, getting some emotional backup during live trades, and even dipping into creating your own custom tools. Let's get into this blueprint for the AI-enhanced trader. All right, let's kick off with method 1. This is probably the easiest way in, but honestly, it might be the biggest time saver. Using AI as your daily market analyst, you get this structured foundation fast, instead of, hours digging through news feeds.
Exactly right. And the real key here is the structure of the prompt you give it. You're not asking for, trading advice. You're demanding a synthesis. You tell ChatGPT, okay, I need a concise market brief, say, for gold and the NASDAQ.
And you specify exactly what data you need, like upcoming earnings, key economic stuff, CPI, the Consumer Price Index, Fed announcements, FOMC minutes. You also ask what moved prices last week, and for some basic technicals.
Right. And those technicals should focus on the key support and resistance levels, SR, and the overall trend, maybe on the daily or weekly charts. The beauty of it is getting all these different pieces, fundamentals, technicals, all pulled together in one objective report.
Yeah, that pull together part is vital. It helps filter out the noise, doesn't it?
Mm-hmm.
When you have this data-driven analysis right there, you're less likely to trade based on some gut feeling or a scary headline. You build conviction from facts.
Mm-hmm. It gives you that quick foundation. It minimizes that feeling of just guessing at the start of the day. It helps you, the listener, build some confidence because you're starting from a place of, well, structured information.
So thinking about beginners specifically, how does structuring the prompt like that actually help counter those fears about, say, market manipulation?
Well, requiring that structured data forces an objective focus. It really minimizes relying on just gut feelings or market noise. Okay, method 2 takes us right into risk management. And this is where math errors can get really, really painful. We're talking about using AI as an advanced position sizing calculator.
Oh, yeah. Manual mistakes here can be incredibly costly, especially if you're, say, aiming for specific prop firm targets, or if you're pyramiding, adding to winning trades. Trying to calculate the weighted average entry across multiple positions by hand, it's just awful.
Right. The AI just takes that headache away instantly. You feed it all the details. Let's use that real example. Maybe you've got 2 buy positions open, 3.5 lots at $105,258 and another half lot at $105,164. And you tell it straight up, I need exactly $10,000 profit from this combined position.
And boom, the AI just spits out the exact take profit level you need down to the cent. In that case, it was $107,746.25. Getting that level of precision manually under pressure, it's tough not to make a slip.
It reduces that mental load so much. And here's another powerful use. Say you accidentally fat finger a trade. Enter way too big. You can instantly ask the AI, okay, calculate the exact stop loss level I need right now to cap my risk at, say, $2,000 max.
I have to admit, I still wrestle with prompt drift myself sometimes, getting the AI to stick to exactly what I ask, or just, honestly, the sheer boredom of double-checking complex math. It's so easy to make one tiny mistake that costs you big.
So if the math part is instant now, what's the absolute key risk step the human still has to take?
You absolutely have to verify the AI's output. Always double-check those critical numbers before hitting the button. Okay, that efficiency leads us nicely into method 3. Strategy validation. Now that AI is handling the tricky math, we can use it to check our own consistency, basically turning AI into an objective mentor who's always on call.
Yeah, this is cool. You start by literally teaching the AI your entire trading strategy, every detail. For instance, I only trade the Paris session. I need to see a sweep of the Asian session liquidity first. Then I need a 5-minute break of structure, that BOS signaling momentum shift. And my target is always 1 to 2 risk reward.
Right. And once the AI really understands your rules, it can actually give you feedback. It might suggest things like, have you considered looking for fair value gaps? Those FEG inefficiencies, or maybe adding a news filter to avoid big events. It helps solidify your plan.
Exactly. Then comes the live validation part. You can upload screenshots of your chart. Maybe you mark the Asia session in blue, Paris in green, and you ask the AI, point blank, based on my rules that I gave you, is this a valid setup? And if it says no, it has to tell you exactly which rule was broken.
Okay, but I wonder, if the AI is constantly validating my setups, do I risk becoming too dependent? Like I stop trusting my own analysis?
That's the critical balance, isn't it? AI isn't perfect. It can definitely misinterpret subtle price action or maybe a complex pattern. You have to remember its limits. It's a powerful supplement, yeah, but not a replacement for your own eyes and judgment.
So if the AI does miss something subtle on the chart, what's the human trader's core job then?
The human has to recognize AI's limits, especially visually, and use it strictly to supplement their own analysis. All right, method 4 dives into what might be the toughest part. Managing the mental game while a trade is live. Here, we use AI like that objective, calm co-pilot you wish you had when the fear or greed starts creeping in.
Oh, this is so key. Dealing with doubt, that fear of losing, or even greed making you hold too long. As soon as a trade is on and the market starts chopping around, sometimes the original logic just evaporates in this cloud of anxiety.
I definitely remember early in my trading seeing a small pullback and just closing a trade way too early, locked in maybe 20% of the potential profit, all because I was scared of seeing like $100 dip. And then, of course, it turned right around and hit the original target later. Ugh, that's the feeling we're trying to manage here.
That fear-based exit is painfully relatable.
Yeah.
So the process here sounds really practical, almost like therapy for traders. You take a screenshot your entry, stop loss, take profit, and importantly, you actually tell the AI how you're feeling. You say, look, I'm feeling really anxious right now, or I'm scared to hold this through the upcoming news.
Right. And because the AI already has your logical documented strategy, it can just reinforce the plan. It provides that objective view, kind of separating the trade's logic from the emotional fog you're in. It's like real-time discipline coaching.
And this could easily become the basis for a really powerful interactive trading journal too, right? Tracking not just trades, but the emotional triggers and how you reacted, with the AI helping you reflect.
So just how important is it to actually tell the AI the emotional context, like saying, I feel anxious? How does that help its guidance?
It's vital. It lets the AI distinguish between the logical plan and the emotion that's maybe clouding your judgment right now. Okay, our fifth and final segment. This one's definitely the most advanced, maybe more aspirational for beginners, but super powerful: custom indicator development. We're actually talking about getting AI to help build custom trading tools, usually using PineScript, which is the language for TradingView charts.
Yeah, this is where you really start tailoring your platform, making it a personalized analysis machine. Now, the free ChatGPT might handle some basic requests. Think of it like stacking simple Lego blocks of code. But for more complex stuff, testing, debugging, a premium AI, or something like Claude often works better.
Just think about the kind of complexity you could build. You could actually prompt an AI to create an indicator that does all this automatically. Draws the session boxes for Asia and Paris, marks the high and low of Asia, checks if there was a specific Asia sweep for liquidity. And only if all that happens, then it puts a green arrow on your chart for a bullish break of structure, but only during the Paris entry window.
It sounds really complex, I know, but the key is iteration. You start simple. Ask the AI just to write the code for drawing the session boxes. Test that visually. Does it work? Okay, great. Then you add the next piece, like marking the high-low. Test again. You build it up layer by layer, working with the AI to fix bugs along the way.
Whoa. Just imagine scaling that kind of precise rules-based pattern spotting across, I don't know, every single currency pair you watch, all at once.
Yeah.
That's some serious automation potential.
So for someone starting out, zero coding experience, what's the absolute best first step to take with this iterative approach?
Start super basic, like just drawing the session boxes. Get that working visually first before adding anything else. Hashtag outro. So we've covered 5 pretty revolutionary ways AI can start changing your trading. From simplifying that daily analysis grind to really shoring up your discipline when things get emotional. It's about working smarter, more systematically.
Let's quickly recap those really critical guidelines, though, for making this work long term. First, AI is a tool. It is not a crutch. You absolutely must keep developing and trusting your own analysis skills.
Second, verification is everything. You cannot skip this, especially with calculations. Always, always double-check the AI's output. You can make mistakes, and you're the one placing the trade.
Yeah. And finally, know the limits. AI can't replace years of screen time and experience. It won't guarantee profits, and it's definitely not going to help you predict or navigate, a true black swan market crash. Human oversight is essential.
The future really does seem to belong to the AI-enhanced trader, doesn't it? The person who uses these tools intelligently, amplifying their skills, overcoming those inherent mental biases we all have.
So your next step, make it practical, make it immediate. Tomorrow morning, when you sit down to prep for the market, actually try method 1. Use that daily market analysis prompt. Build that objective, structured foundation for your trading day or your week. See how it feels.
And just remember this final thought.
Yeah.
Even if you have the smartest AI assistant whispering pure logic in your ear, disciplined execution, that's still entirely on you. That remains the key.
Until next time.